Welcome to TICE. Today I have with me Mr. Vikram Gupta. He's the founder of IvyCap Ventures. Welcome, sir.
Thank you.
So to begin with the conversation, can you take me through the journey of IvyCap? What inspired you to begin with it?
So IvyCap started in 2011. Before that, I was actually running a healthcare fund for a large group in India. I would say as luck would have it, that fund decided to roll back because of an investment happened in the group at a larger scale. They didn't want to be in a PE ecosystem at all. So I moved on to set up IvyCap in 2011. And the whole model is actually centered around the people focus. So I come from the IIT ecosystem myself. I graduated from IIT Delhi in 1993. And my co-founders are either my hostel mates or batchmates. Initial idea was to focus on the IIT alumni, and the target was to raise 200 crores in the first fund. We ended up raising 240 crores for the first fund with the primary focus on the IIT alumni ecosystem. A significant part of our profit we decided to give back to the IITs as endowment, and that's how I personally focused a lot on setting up India's first endowment fund at IIT Delhi. Part of our profits go back to the education ecosystem of the country. We currently manage now about 5,000 crores across 4 funds. We are currently investing from our Fund 4, which is 2,000 crore size fund. And our anchor investor continues to be the IIT Alumni Trust. And we have a large LP base from India. In fact, 70% of our capital is Indian institutions, 20% is IIT alumni, and the remaining 10% is family offices. So that's the current mix of our investors. We are focused on investing in Series A primarily, but we invest between seed to Series B. We like to take significant minority stakes, take active board positions in companies. We're sector agnostic, but we invest in high growth sectors. Currently, we manage a portfolio of about 50 companies. We've done 10 very meaningful exits. We created India's first Dragon in a VC portfolio. Dragon is a company that gives you cash returns of more than 1x of the entire fund. We created a Dragon in 2021 when we did partial exits from Purple. And we continue to be excited about what's happening in the ecosystem. And of course, the journey has been very rewarding so far.
Right.
So very excited about the potential that sits there, and also very thankful to the quality of people who came along with us, and most of the distinguished alumni of IITs, the deans of the IITs, the directors of the IITs, they all supported this initiative. And today we have support from the entire ecosystem, 500,000 alumni, 5,000 alumni who actually come forward and said we'll support this through mentorship. And most of the deal flow that originates in the IIT ecosystem comes to us today. So very fortunate to be at the stage where we are. It's been now 13 years since we've been there.
So you mentioned about the stages that you invest in, but can you also tell me what kind of innovation and what kind of startups do you really invest in?
So as I said, we are sector agnostic. We are Series A focused. We like meaningful stakes in companies where the idea is that we mentor them, coach them through our mentorship program. And we do a top-down approach based on the sectors and the specific gap areas in terms of problems that are yet to be solved or that are not being solved the right way. Entrepreneurs are trying to solve those problems in a meaningful way, which can be scaled quite substantially. So those are the problems we are focused on. Eventually, it's a people-focused fund. We are focused primarily on the people, the driving force behind them. So we spend a lot of time on the why part in addition to what and how, why they're doing it. So what's driving them, and therefore, look for whether these companies can scale up to a large revenue, not the valuation. Valuation is a derived thing for us and not the target thing for us. And then that's something we are quite structured in our approach. So certain people we track over time, and then once we feel they're ready, we invest in them.
So you talked about valuation in your previous answer. So I would like to know from you, what are the principles and ethics do you really follow while making an investment?
So valuation is really a derived number based on various factors, and it comes later after we have really analyzed the founder's conviction and the reason why they're doing it, and the scale they're thinking, and the value that they are trying to build, and also their willingness and the aptitude and attitude towards accepting mentorship and guidance. So once we qualify on all these fronts, we actually think of a 5 to 6 year time frame for exit, because at the end of the day, we are a venture capital fund. We are managing third-party capital. We have to return the money of our investors. So we focus on understanding what value can be created over a 5-6 year period, and that can obviously translate it into numbers. And numbers, obviously, people will come up with their own formula for valuations, and we look at those numbers as well to see what kind of an outcome we can derive. Primarily, we are looking at an M&A as an outcome for us. And if we are convinced that the company will create substantial scale in 5-6 years, which becomes attractive for a buyer, and a substantial differentiation which makes it get a premium on its outcome, that becomes the right candidate for us. So that's how we look at. So of course, corporate governance is very important for us, that we look at as a mindset. It's more of a mindset and values that are core to people. And if the core values, they look at corporate governance as the key, that becomes a very important criteria for us.
Also, despite Indian startup ecosystem growing immensely, there has been questions of funding winters. So do you really think that funding winters exist?
There are always times when the cycle goes up and down, right? So as long as the overall trend is positive and the overall growth is happening, there could be trends when when people pull back a little bit and maybe come back in a bigger way. And I think we are seeing that maybe 2022 was a time when a lot of funding went out of the system, primarily because of the series of events that happened. We know huge liquidity happened because of COVID. US printed a lot of money, and inflation went up quite substantially. Then US Fed increased the interest rates quite substantially. Interest rates went up from 0 to 5. Liquidity crunch suddenly happened 2022 and 23. That led to the dollar moving into a lot of fixed income and other areas. So obviously the money did not flow into the private investments. We are expecting that money to flow back as the inflation eases out, and therefore the interest rate comes down. And that will bring a lot more capital. It's a matter of time that's going to happen. The other major event is the elections and the outcome of elections. I think depending on the actual numbers, we will see substantial capital coming back into the system, and therefore the second half of the year, you will see larger deals happening which had gone out of the system for a while. So therefore, our startup ecosystem getting a boost again. The number of unicorns, as people say, will grow further, and people who had gone down from the unicorn valuations, many of them might come back if they were able to hold well in the meantime. It bodes well for the ecosystem. So I think quite exciting from that perspective.
Also, there is this new concept of venture debt or debt funding. So what are your thoughts on this?
So venture debt as an asset class has followed venture equity. India's venture equity industry is relatively new, not more than 15 years old overall. And the debt actually tries to fill up the gap more from the perspective that as the companies scale up, existing shareholders don't want to dilute their equity, and venture debt thrives on the cash flows that the companies generate. Or if a company is raising 100 crores, typically the target is that can you raise 80 in equity and 20 in debt, so that you still get the returns. From a founder's perspective, entrepreneur's perspective, if they have utilization of capital in working capital, for example, or working capital ideally should be raised through debt. Why should you raise equity for funding your working capital? So therefore, from a use of capital perspective, there are opportunities, and therefore venture debt as an asset class will keep growing, and we are quite as an ecosystem maturing at this stage, which is a good thing happening.
Also, to wrap up the conversation, can you tell me some trends, funding trends that will shape the Indian startup ecosystem?
So, we're talking about India as the third largest startup ecosystem. We're talking about India becoming the third largest economy very soon. And we're talking about the number of registered, DPIIT registered startups now touching almost 120,000. And then we are talking about 113 companies that ever became unicorns. And all these things tell you about the numbers and the growth which is happening in India. And the other interesting factor is the number of venture capital funds. When I started IvyCap, there were just about 7-8 funds in India at that time investing in early to growth stage companies. Today, there are more than 1,200 registered VC funds in India. So, in a way, a lot more capital is available these days, a lot more angel funds available, and therefore, good for entrepreneurs. Entrepreneurs who have done entrepreneurship before are coming back. If they failed earlier, they're coming back with much stronger. Entrepreneurs who were not founders themselves but were working directly with the founders, they are becoming entrepreneurs. So the quality of entrepreneurs is improving quite substantially. And I think it's all good for the system. And these trends, are very good for India as a country, because a lot of employment generation is happening. A lot of technology development is happening. I think new technology areas, generative AI, IoT, and machine learning and blockchain, all these technologies are contributing to the ways things are done. So we are quite excited about newer opportunities emerging and looking to invest in them.
Thank you, Mr. Gupta, for your insightful thoughts.
Thank you so much.